Hello and welcome to another Smaulgld live stream. Today is Friday night, November 2nd, 2018. And tonight we're going to be taking a look at gold and silver over the last 10 years, last 45, 46, 47 years. And we're going to look at them in different currencies and perhaps gain a little insight as to how they are performing and how they do perform, not just against the dollar. But first, let's look at how gold and silver perform today against the dollar. Now, today was a very interesting day again. This morning, we had at 8:30 the non-farm payroll, 250,000 jobs created versus, I think, estimates range between 193,000 and 200,000. And that immediately set off the Dow heading higher, NASDAQ, S&P. And that rally lasted till about 10:15 in the morning Eastern time. And then pretty much fell apart after that. The dollar did rise, but the gold price was somewhat, I would say it also rose early in the morning and fell on the jobs report and bounced around and ended up closing down a little bit, 52 cents. Fell down just a little bit. It fell down just a little bit, about 0.4%. And that closed at 1232.69. So that's the end of the week for gold. And let's see what happened to silver. And the question is really what happened to silver. Not too much, same thing. A big day in silver yesterday, but not a big day today. Closed up just a little bit, just a little bit. Closed up 1 cent to 0.4%, closing at 14.73. So what is that going to do to our gold-silver ratio? Well, it's going to make it go up just a little bit. One up just a little bit. One up about, one up to, it's now at 83.71. Was as high as 84.18. All right, so there you can see your gold-silver ratio still well above 80-1. By the way, today I did a interview with silver doctors James Henry Anderson, covered the LBMA and some of the shenanigans going on in Venezuela. I'll put the link up tomorrow on the Smaulgld site. You can watch it directly from there. If you can't wait, head on over to the Silver Doctors, not right now, the Silver Doctors YouTube channel and check it out. I haven't heard it, so I do remember it, though. It was only earlier today. All right, now let's see. What other charts do we got? Let's do some of the favorites that we've been covering, not necessarily connected to tonight's topic, but charts that we've been taking a look at every night. And let's see, what do we want to look at? Let's look at the gold Dow versus the gold through yesterday ratio, and we see one up just a little bit. Yeah, just a little bit to 20.371. You can see there the Dow gold ratio still relatively elevated, and that's a function of obviously a lower gold price and a higher Dow. But we'll keep track of that as we go forward every day. And we've taken a liking to showing the Brinks and the JP Morgan silver COMEX vaults. Let's take a look at those. And we can see that the Brinks stockpile fell just a little bit. Just a little bit down to 49,275,159 ounces. And we're going to take a look at our other favorite COMEX vault, JP Morgan. Here we go. Big stack. 150,983,304 ounces. That is an all-time high for the JP Morgan silver stockpile, and that is in 1,000 ounce good delivery COMEX bars. That's a lot of silver there. It's a lot of silver. All right, now let's move on to tonight's topic. And let me see, we'll do a little audience participation here. Would you like to do gold or silver first? The first time I see two of one, we will head with those first. You want to do gold or silver first? If I don't see anything in 10 seconds, I'm going to start with gold. Oh, looks like gold. Silver. Tiebreaker. I need a tiebreaker. I got to think. What is AG? AU is gold. Yeah, we're going to do silver. Okay, so we're going to do silver first. Now, what I'm going to show you is a 10-year chart. Then I'm going to give you some statistics for silver over the last 40 some odd years. And then we're going to look at some individual countries or their currencies versus silver. Now, all the way to the left, we're going to take a look at the US dollar, silver versus the dollar. And one of the things that's interesting when you look at gold, silver versus the dollar is a lot of red. But the other thing you'll see is some pretty high green numbers. Look at 2009, a 57% increase in silver. 2010, an 80% increase. Now, 2011 is when it hit its high, but it ended up that year actually closing down 8% because it ratcheted up to 50 and then it fell down to 43 and it ended up, I don't know, ended up in the 30s at some point. A little rebound 2012. Yeah, my view at the time in 2012 was, yep, we're back in the game here and it's going to head higher. And then bam, 2013, 14, and 15 down 34%, 18%, 13%. 2016 looked like we're back on the chain gang, and Brexit was happening, went up last year, eked out a gain. Go to the last line, you see 2018, and here we are at 14% down. If I showed you the chart yesterday, it was down 15%. But here's something interesting. Keep this number in mind. You had 1, 2, 3, 4, 5 out of the last 10 years, from 8 to 17, down, and then you had 5 up years. But look at that 10-year average. It's 6.4%. It's not bad, assuming that you're willing to take that roller coaster ride and invest the same amount of money each year and take your lumps at a 27% loss and a 34% loss, and also grab that 80% gain and that 57% gain. This ties into my characterization of silver as a spike and dive metal. This is clearly a spike and dive metal. But now, let's move all the way over to the right and look at the one called TRY. That is the Turkish lira. Now, if you're in Turkey and you bought every year, you would have gotten that big gain in 2010, an 87% gain, but you only would have had 3 years where you're lost against your local currency. I think that's pretty amazing because that shows that silver is holding its value against a pretty weak fiat currency, the Turkish lira. And over time, you know, if you bought every year, every 10 years, 17.8% gain. Not bad if you're in Turkish lira. The one to the right of the US dollar, that is the Argentine peso. Well, there you do even better. Only 3 years did you actually lose value against your home currency. And in 2011, it was almost a win. So if you had silver in Argentina in pesos, but exchange your pesos for silver, you'd be up versus the peso 25% over 10 years and on average. And in Turkey, you'd be up 17.8%. You'd almost have to think you were mentally impaired to save your money in your local currency rather than putting it in to silver. Now, these two countries, when you look at Argentina and Turkey to the right there, they're a good argument for why precious metals are better than fiat currencies. They are debased and you lose. And let's just look at one more. Go all the way over now. You see the Argentine one next to US dollar. Then you got AUD, that's the Australian dollar. Then you got BRL, that's the Brazilian real. Same thing there. You lost 4 years, but 10% average gain. And again, you'd have been better off saving your money in silver rather than in the local currency. So let's take a look now at those 3 currencies in silver. So let's start with Argentina versus the silver versus the Argentine peso. And here's a chart for you. Now you can see this is just a 5-year chart, but it's giving you the same concept. Is you wouldn't have lost. You just keep buying, it went up. So you used to be able to get an ounce of silver for 100 pesos. Ahora mismo you would get look at that, 500. You can get an ounce of silver for 500 pesos. So if you bought back in 2013-14, you made 5 times your pesos. Can't say the same in the United States. You bought back in 2013, you lost half your money. So you can see it depends on your currency. A lot of people spend a lot of time trashing the dollar. Dollar is unsustainable. End of dollar hegemony. All that stuff. Yes, fiat. What they should be saying is fiat currencies are no good. Yes, the dollar is the strongest of the fiat currencies. Attacking the dollar first is a mistake. It's the other fiat currencies, as you can see. It is to use a cliche, a no-brainer. I say you have to be mentally impaired to save your money in these foreign currencies, these weak currencies. It's not quite the same. People act as if that in the U.S., that if you hold dollars, they're toilet paper and so on. Not the case. And you'll see with dollars, it's a stronger case for gold than it is for silver. So there's Argentine pesos versus silver. No way, Jose, do you lose saving in silver in Argentina. Let's look at Brazil. Similar story. Not as strong, but still. There wasn't a time in 2014. There was a little bit in 13. In 2014, if you bought at any time during 2014, you'd still be up. Any time in 2016, 15, you might be down. So it's not that strong of a case in Brazilian real, but still, you're holding pretty steady. You're not losing value. Now let's look now at the Turkish lira in silver. Let's take a look at our Turkish lira. Here we go. Now here, you're going to be doing pretty well. You could have bought in 2013, 14, 15, 16, 17, and even early 18 up till about the summertime, and you'd still be well ahead than if you had put your money in Turkish lira. So far better off to put your money, save in silver versus these 3 currencies. All right, let's go back now to the silver chart and just take a quick look at some of the other. Then I'm going to show you gold, and gold's a pretty big deal. But before I do that, let me show you what's happening with silver this year. Now, we mentioned Argentina, we mentioned Brazil, we mentioned Turkey. Keep that in mind. This year, if you had silver, you'd be up 64.3% if you lived in Argentina. And you would have a gain in pesos. In Brazil, you might have lost a bit, 4.3%, but not the 14.3% you lost in dollars in the United States. Now you can see across the board this year, silver's not really doing very well. Only in Turkish lira, all the way to the right there, 24%. ZAR, that is the South African rand, even there, not doing that well. You gained a little bit. Now, I'd rather have a 0.3% gain in silver than to be holding on to anything called the South African rand. But that's just me, as they say. But if you look in Japanese yen, down 14%. Actually, you can see the dollar, it's down the most. That's what I'm saying. It highlights that the dollar is the strongest fiat currency. And looks like in this chart of these currencies, the Argentine peso is the worst. So it's relative. Holding metals, silver, is a much better deal than holding the local currency in a few of these, but not necessarily holding it in dollars. Now, people own it because they think the dollar at some point is going to have troubles, and it will. But again, it's not, when you've seen, it doesn't have the same history of troubles as these other currencies that have been having trouble for 5-10 years and probably their whole existence. All right, so now we've done silver pretty much. Let's take one last look at the silver chart before we move over and do the same thing for gold. So there you go. The silver price, keep that 6.4 number at the bottom left, 10-year average. and when we take a look at gold. So you see 5 years, 2008, 2011, 2013, 14, 15, all in red, in 2018 in red. And this year you only have, across the bottom in 2018, positive returns in silver, in Argentine pesos, Turkish lira in green, in South African rand at 0.3%. But look at those averages again. You can see across the bottom. So the U.S. average, the dollar average, isn't bad, except you've got one loss of 27%, another loss at 35%, another loss at 18%, another loss at 13%, another loss at 14%. If you could pick your years, you'd want to stay away from those years. You'd want to be in something else. It's not good to lose 35% a year in dollars. Or you look at it the other way. You're accumulating at those low levels for when you get the spike. So, but it does highlight that silver is a very, very, it's not investment advice, but it's obvious it's a very risky metal, at least in dollar terms. Obviously less risky in Argentine pesos and Turkish lira and South African rand. All right, let's try to go through the same exercise over on gold. All right, now, this is what I find interesting is, if you look at gold the last 10 years, only down 3 times. But it never had the 80% gain that you had in 2010. So you see on the far left there, you can see a nice 27% gains. But a 27% loss in 2013. But look at that 10-year average. It's lower than the 6.4% average than silver. So if you got the stomach for silver, you actually had a higher average over 10 years. Now, that wouldn't be the case if you averaged in 2018. It'd be about the same because silver is down 14%, 14.3% in 2018, while gold is only down 5% in 2018. But in a sense, they're kind of averaging out to about the same, except that you don't have the roller coaster in gold that you have in silver. And in fact, if take 2014, that's pretty much a neutral year, 0.2% down. So basically, you're only down in gold 2 years over the last 10 years. Because you're really not down when you're down 0.2%. And of course, this year. But there's another interesting stat about gold. Gold went up, I believe, 12 years in a row from 2001 up till 2014 2013. So that was a very big run there that you had in gold, and silver had a few down years during that. But let's look at Argentina. And again, you'd have to be impaired to ever hold Argentine pesos during that time period. Look at that. 2008, it's right to the right of the US dollar. Only 1 year did the peso actually outperform gold. You're basically making average of 25% a year versus the peso in gold, which is far better than you would have made in silver. I'll go over now to the Turkish lira. Just 1 year did the Turkish lira outperform gold. This has been quite a decade, at least. Again, if you were taking your Turkish lira from your paycheck and whatever extra money you had, instead of putting it in the bank, you bought a little tiny sliver of gold or however much money you were making, you would have maintained value against the lira. It would have risen against the depreciating lira. Same with the South African rand. Only 2 years did it go down. 2013 and 2016. You can see that to the far right. And again, 12% average gain. 18% average, 0.7% average gain for the Turkish lira. Russian ruble, too. Foolish to have rubles. That's why Russia buys. This is what people understand. Why does Russia buy so much gold? It converts its domestic garbage currency into its locally, domestically produced gold. They got the 3rd largest mining production in the world. They got one of the worst currencies. They get rid of those rubles as fast as they can. So people think they're stacking gold. They know what's coming. No, they know what they have. They have rubles. They don't want rubles. Rubles are trash. So they dump them. They're dumping rubles. And they put them into gold. And that does give a little bit of backing to the ruble, but not much, as you can see. 16.6% average gain in holding gold versus the ruble. 78% gain in 2014 when gold was flat. That was a very big year for depreciating rubles. This year up 8.1%. So you can see this chart has a lot more green on it than the silver chart. And let's get a little more into it here. And you can really see, let's look at Argentina first again in gold. And where'd she go? ¿Dónde está Argentina? No lo digo. Ah, aquí está. All right, here we go. Argentina. Look at that. You bought any time up until September, you're up. If you bought back in, this is only a 2-year chart, 22,000 pesos back 2 years ago, today, double. Boom, look at that, 22,000 to the left, 44,000 today. So, all good when you have gold in Argentina. You're not going anywhere. You're not going down. Brazil, take a look. Same thing, 2-year chart. Now remember, on the silver chart, there were periods where there were a little higher prices early in the chart than the current. But right now, 4,600 Brazilian real versus 3,700 back in January, a couple of years ago. So big gains in gold versus the Brazilian real. But let's take a look at Turkey. Now Turkey, you really need to have your gold, and there's no wonder the Turkish people buy gold. Look at that. Just a couple of years ago, 3,500, and now you've more than just about doubled to 7,000 lira. Earlier this year, it was at like 8,200. And Turkey refines a lot of gold. We talked about that today on the Silver Doctors with James Anderson. They refine gold for Venezuela. Now, the United States probably doesn't want them to do that anymore. But Turkey is a gold culture. Turkey actually has gold mines as well. And let's just take one final look now at this year. Gold is really having an okay year versus most currencies. We saw, not so much with silver, but look at a lot of green here. There's a lot of green on this chart for gold percentage growth in 2018. We didn't see that in silver, but pretty much most of the countries, you're either flat or you're up. Argentine pesos, 82% up. Australian dollar, 3% up. Brazilian real, 6% up. Canadian dollar, down 1%. Franc, Swiss franc, down 2.2%. Up a bit in the Chinese yuan. The euro, it's flat. Pound, it's down 1%. Which one is that? That is the Indonesian rupiah, whatever they're called, up. Indian rupee, up 9%. Korean won, pretty much flat. Japanese yen, down about 5%. Mexican peso, down 2.7%. And the rest are up. Turkey, up 37%. Up 11% against the rand. Up 8% versus the ruble. And the New Zealand dollar, up 1.9%. So gold's having an okay year. It's just that the dollar is having a very strong year this year. So your arguments that you can make for precious metals versus fiat and the depreciation, all well-founded, but more well-founded in weaker fiat currencies. And there is a difference. Yes, they're all made out of paper, and yes, they all can be represented digitally, but it does come down to the strength of the economies, to the strength of the monetary policies, the fiscal policies, the military policies, and clearly those things do drive the dollar hegemony higher than the others. Now, over on the cryptos, we didn't mention those, and we'll get to your comments. Bitcoin flat over the last 24 hours at 63.46. That's kind of a trend, flat Bitcoin. Bitcoin Cash went up to 457, up 7.5%. Ethereum at $200, up about 0.25%. Litecoin went up a bit more to 51.05, up about 1.25%. And Ethereum up 9%. Now, I mentioned the stock market had a difficult day after it kind of came out to shoot, going stronger on the jobs report, but then it faded down. The Dow wasn't down that much, down 0.43% or 109 points. down to 25,270. NASDAQ 7356, down 77. That was down 1%. And S&P 500 down 0.63% at 2723, and that was down about 17.31%. The biggest decliner, one of the biggest decliners, was Apple. Apple released better than expected earnings, but it's because they sold their iPhones at higher prices rather than selling more of them. Wall Street likes to see not bigger numbers, they like to see more numbers. So they had sold more iPhones rather than selling more in revenues because they had higher prices per iPhone. All right, let's see what we got in the way of comments on our people here. All right, let's see. Roger Henley, I wonder what will be the opening theme music today. Well, the opening theme music today, just so you guys, I'm going to play them for you so you know which ones are which. These are all by Mark Battaglia. The first one, this one is called Litecoin Charlie. All right, this one is called Dow 20,000. And this one is called Bitcoin Blues. And this one is called Dim Rickards. All right, there's your groove for your Friday night. Let's see what we got here. Other comments or questions? Roger, do you truly believe in the advertised job numbers? You believe the candidate Trump said about unemployment? I believe that they use the same methodology. They don't count the jobs. They don't go out and like find them. There's the establishment survey. The methodology, I think, I don't believe the methodology captures the true employment position, but it does capture it pretty much on a relative basis. So they use these birth, death analysis and assumptions, and so they don't count the jobs. It's not like it's payroll and they add them all up and then they say there's so many jobs they created. So I don't truly believe them in the sense that I would never swear when they say 156,722,353 people have jobs. I don't believe that. But I do believe that they're relative to each other. And then we're talking about which one we wanted to start with. Pablo, silver must be to the moon in Venezuela. It's hard to tell, and we talked about that today because they have these two different exchange rates. So I have the charts, and they're not really worth looking at. You're right, they just go straight up. Anything that's worth anything is worth more than any unit of a Venezuelan currency. Nicholas Coley, the dollar's toilet paper. That is the truth, not just in reality. You feel free to send all of your U.S. dollars to me, because U.S. dollars can buy stuff more than all the other currencies that you see on the chart. And even in this year and last year and for most years, more than silver would buy you. So that's really a misnomer. It's an opinion to say that. It's not a fact. Because a currency is the value of something is worth what it can buy. And if I can convert dollars into food, into rent, into gasoline, more than I can convert the equivalent amount of silver, then the dollar is not toilet paper. You'd be foolish to use it as toilet paper. You could say that about the Venezuelan, whatever they have, the Bolivar, I think it's called. But you cannot say that about the dollar. You could say one day the dollar will be worthless than toilet paper, but it's not today. Today you can have buildings built, you can have steamships built, you can hire 1 million people if you have dollars. So anyone who says the dollar is toilet paper, it's worthless, you're just watching too many YouTube videos. of people selling you gold and silver. It's not true. And they take dollars for their gold and silver. They take dollars for their subscriptions when they rant and rave about how the dollar's going to zero. They wouldn't be accepting dollars for their subscriptions, and they wouldn't be accepting dollars for their gold and silver. So the dollar is valuable. You can say it has its flaws. You can say they print too much of it. You could say interest rates are too low, too high. It's not backed by anything. That's all true. But it's your opinion that it's not worth anything because the world values the dollar. If I had enough dollars, I can fly to Tahiti. And when I get there, I could live like a king if I had enough of those worthless pieces of toilet paper. It's foolish when people say the dollar is toilet paper. It's not. It may one day be. There's nothing wrong with saying I predict the dollar will go to worthlessness. I predict that. But to insist that it's worth less today, you really are listening to too many YouTube videos, or you're subscribed to too many of the wrong newsletters if they tell you that, because they're taking it. Yeah, Shark Air, is it me or those charts boys? Hard for me to tell. I don't know what you see. They look all right to me. So I don't know what shows up on your end with YouTube. Taylor Collins, Lewis, you're the man. Smaulgld, my favorite YouTube channel. Well, thanks for joining us tonight again, Taylor. Even though I've been listening, following for a while. Max Strong says, greeting copper bugs. Copper is so useful. Without copper, we could not lead our lives. Copper conducts electricity. You can make bullets out of copper. Pablo Pena, game changer. That is right. Game over and game changer. Roger Henley, Australia never got to see $50 US silver because at the time the Aussie dollar was worth more than the US dollar. That's a shame. Yes, there was that time period. The Australian dollar was worth more. Now it's worth less. Pablo Pena, iPhone 11 only 2100 maybe. Yeah, it's ridiculous. Taylor Collins, what made you so interested in the markets, precious metals, etc.? Has your interest then increased or decreased over time? I got interested in the precious metals from the financial crisis, and I never paid a lot of attention to gold or silver. I paid attention to the economy, but more theoretical. I studied Chicago School of Economics. I'd never heard of Austrian School of Economics. And I was more interested in how monetary policy impacted employment and GDP, just basic economic stuff that I had studied. And since when I studied from the 80s into the 90s, there was no crisis study. In other words, I learned about the Great Depression, but and the 1987 stock market crash was but a blip, and I knew what had happened. So I wasn't interested in store of value and end of dollar hegemony and all that kind of stuff. I was more interested in what the Fed was doing. I wrote a column in the 90s. I don't remember for who it was, but it was for some online magazine. And I followed what the Fed did. It wasn't until the mid-2000s when I started reading Austrian economists, and they were talking about ending the Fed, and I just never even thought that you even. I always thought, well, it's either what the Fed does or what the Fed doesn't do. I never thought it could be, well, the Fed doesn't have to do anything. It doesn't even have to be there. That never entered into my head. So I studied economics based on what the Fed did during the Depression, what it did during the financial during the 1987 stock crash, what it was doing during the 2000s, the 90s, irrational exuberance. I remember all that. And so I didn't get interested in following precious metals until I learned about the Austrian school, and because they were explaining why we had this financial crisis, and I had seen that coming, and I had written about that as well. I didn't look at it from gold or silver or Austrian economics. I just thought, well, what's going to happen when all these people, because I saw it firsthand where people were buying houses that I knew they couldn't afford. And I remember telling people that, well, they're going to lose their houses. And they said, well, there's so many people bought their house. Was everybody going to lose their house? And I said, yeah, why? I mean, why wouldn't they? if they can't buy them and interest rates go higher and they can't afford them, and they got loans on the basis of what they told them, which was, I don't make any money, but I'm buying a $400,000 home. So I saw that coming, but I didn't go through the whole analysis. So long story short, I then started looking at, well, what can't you do what asset can't you do that to? Just loan it out? Well, I guess you can with gold and silver, but I mean, what asset isn't something that isn't a liability, that doesn't rely on what people do in order for it to go up or down? And that's when I found through the Austrian studies that gold and silver were those types of assets. Now, real estate should be, but because you have to borrow money, you're reliant on your ability to pay it back. Otherwise, you don't own it. You have to pay your taxes. Your neighbors can mess up your value of your house because of how they act. It could be a crime. Something can happen in your area. And so the only real assets that I saw that were solid were the gold and the silver, because the government or a company can't mess up the value of those because they already are there. They exist. And I remember reading about Warren Buffett, and he was always saying that you can bury gold in the ground and come back 10 years later and it's still there and it hasn't changed. And I thought, well, that's a good thing, because you could have invested in pets.com 10 years earlier. When you come back 10 years later, it's gone. So I started to think about the differences between, one of the first blog posts I wrote for Smaulgld was, is gold an asset or an investment? And I came down on the side that it was an asset, because you can't do anything to it. No one can do anything to it or for it to make it any better or any worse. And therefore, that's almost the definition of an asset. You put your money in something, and by the efforts of you or somebody else, it goes higher, becomes worth more. The company does better, makes more revenues, comes up with more products. That's an investment. But an asset is just something that sits there, and you either have to maintain it, or store it, insure it, or whatever you have to do. But there's nothing you could do to make it go higher. So that's how I got interested in following it. And the reason I started writing about it, I was more involved in real estate, and I read a lot of this stuff about gold and silver. And what happened was I started realizing that some of it was true, but a lot of it was just pump and puffed and cherry-picked from the wrong orchard facts so that they could sell subscriptions, game over and game changer. And then I started to see a pattern where either they believe this stuff, that all this stuff is means that it's set to skyrocket, and maybe they actually did believe it. But over time, when these predictions didn't come true, I started to look in to figure out, well, why aren't they coming true? And I started doing my own research and going to source documents rather than just trusting someone tell me. Central banks are buying gold. That is all you need to know. Then I started looking into which central banks, how much are they buying, how much gold is that in the grand scheme of things, how much gold is being mined, and started to put the numbers in some type of perspective and understanding it better. So that's just my nature. I like to understand things better than a soundbite. As I mentioned, a lot of people learn just enough to learn to either be dangerous, or they learn just enough to know that they're for something or against something. That's why you hear a lot. JP Morgan has 800 million ounces of silver. That is all I need to know. No, you don't need. You need to know more than that. First, you need to know, is that even true? But in any event, that's how I got into it. It's because I like to know what's going on and a little more than just the elevator pitch. Because the elevator pitch you end up, when you get off the elevator, you might have lost your wallet. Can you give us a real estate update as housing prices dropping? Real estate's being hit because of rising interest rates. The reality on interest rates can hit a lot sooner than it can on stocks, because there are people who are lining up to buy a house and they've priced in what they can afford, and the real estate agents always tell you buy as much house as you can afford. And they look at something and they're ready to buy it, and then the interest rate rises and they can no longer afford it. So then they can't buy it. That house sale falls through. Same thing with home builders. They stop building houses. So it looks like the housing market, at least in terms of price appreciation, is clearly slowing, and also in terms of new homes sold and existing homes sold is slowing down. Boulevard, says Pablo Pena. Let's see. Yeah. Roger Henley, I prefer the 20,000 music theme. The last one is yeah, that last one people don't like. It's a little too it's not swamp music. It's just it is a little sleazy sounding. You hadn't heard Bitcoin Blues played yet. All right, I'll play that one tomorrow night then. All right. Taylor Collins. Lewis has opened my eyes to a lot of the BS headline stories and plot lines that the precious metal pumpers use to entice people to stack to the moon. Greatly appreciated. Taylor says, geopolitics are very complex, but the pumpers want you to think they've got a PhD and know the world leaders plan on an intimate level. That's what drives me crazy. Well, China's going to do this, and China's going to do that. They don't know that. And then China said to Germany, this is what we're going to do. Yeah, they were in the room, and China told them that. Oh, my. Great explanation for how you got interested, Lewis. Thanks for taking the time and answering. All right. Alistair McLeod, Kenneth Shoregun got me early. Well, Alistair, if you read his work, he's very much skewed that China, he calls it China, that China is like, there's nothing, everything about China is great. Lots of production, they love gold, they're going to use that gold to be against the dollar, and I don't understand, I don't understand that. I mean, China... You have to dissect China and realize that they have a bigger debt Ponzi scheme going on than the United States. This gold-backed yuan stuff was always nonsense. This last thing a country with that much debt would ever want to do would tie their hands with gold. I mean, they have created more debt and poured more concrete than any country in the last 10 years than has been created in 100 years. It's just unbelievable. The level of the Ponzi scheme there, and not to mention the social credit score and the total top-down totalitarian type of economy, society. It's just there's a difference between Chinese culture and Chinese government, and a lot of these people that praise China, they're supposedly Misesians and libertarians. You're like, are you out of your minds? I mean, China is the furthest thing from a libertarian society. I think what happened to libertarians is they confused gold with being a libertarian. Just because China has gold, somehow there's some type of sound money capitalistic. They actually cheer on China. Here's how China can crush the dollar. First of all, they can't. But second of all, why do you want that? I don't understand. It's not like China, if somehow the rest of the world was run by China, the world would be a better place. It just seems odd to me. All right, let's see. All the red pill truth echo chamber love to pump precious metals, while the flat earth, chemtrails, jet fuel hoax. Yeah. What happens is, you know, the guy who made that music, Mark Battaglia, he's the one who came up with the second red pill. And that's why I call Smaulgld the red pill for the red pilled. So when you first hear all this stuff, I mean, there's a lot of truth in it. Yeah, when the people who say the dollar is toilet paper, that's the first red pill. You hear, oh my goodness, look at this debt, it's unsustainable. The United States has a $20 trillion, whatever it was at the time, $15 trillion deficit. It's got unfunded liabilities, and that is all you need to know. So the dollar is toilet paper. Okay, but you need to know more than that. It's all relative. You need to know what the dollar is in comparison to all of the other fiat currencies, what the debt to GDP, what the debt to tax ratio, what all of the other countries' central banks are doing, who runs those central banks. And then you start to realize the dollar is not as in the same position, is in better position than, for example, perhaps the euro, or perhaps, or definitely the Chinese yuan. But what happens is you get a narrative in your head. The dollar is toilet paper. China is going to crush the dollar. The dollar dies and collapses in 2015. Well, whatever it is. And then they just repeat the narrative, and they get everybody else to repeat it. And you see it on 20 different channels, and they're all talking about end the dollar hegemony, end of the petrodollar. not realizing that the petrodollar is not as relevant as it used to be. The petrodollar gave the dollar, in a sense, backing back in the 70s and early 80s, because there was a movement afoot amongst the industrialized countries that, hey, if the United States is going to screw us out of dollar conversion, as was their right under Bretton Woods, and they're no longer going to provide us with with gold in exchange for the dollar, why do we need the dollar? And that's when Kissinger and Nixon scrambled and said, because you need to buy oil from Saudi Arabia, and Saudi Arabia is only going to sell you oil if you have dollars, and they're only going to price it in dollars, so there you go. And they ran over to Saudi Arabia and they said, you do that for us, and we'll make sure we protect you, and we'll sell you arms, and don't worry about it. So the Europeans decided, all right, well, I guess we'll have to go along with that. That's when the United States, Connolly said to them at one of the G8 meetings, it's our currency, your problem, and indeed it was. But they had no other solution because they didn't have any backing of gold for their currencies. It was decided in 1944 the dollar would be the currency backed by gold, as opposed to a classical gold standard where every country measured their currency by a unit of gold. We haven't had that since the late 19th century, early 20th century. So the petrodollar was very important then. It's not important now for a couple of reasons. First of all, people or countries hold dollars far in excess of the amounts that they need to buy oil from Saudi Arabia. They hold them because they conduct all kinds of, and this is developed, over 45 years. They use dollars for all types of international transactions because everybody uses dollars. Everybody accepts dollars. It's that use value that keeps the dollar strong as well. Everybody uses it. Everybody holds it as a reserve far in excess of what they need to buy oil from Saudi Arabia. But even more important, if not more important, but another point is Saudi Arabia is no longer the big, large oil producing country in the world. It's the United States. The United States now produces more oil than Saudi Arabia, and soon will actually export more oil than Saudi Arabia. So going on they need oil, they need dollars to buy, they only need dollars to buy oil from Saudi Arabia. Well, then why don't you say, then they need dollars to buy oil from the United States? And the United States also exports massive amounts of liquid natural gas and of coal. So you could say the petrodollar is now no longer backed by Saudi oil. It's backed by U.S. oil, U.S. natural gas, and U.S. coal, and just trade with the United States. So this end of the petrodollar, then they start talking about SDRs and resets and gold. Go buy the newsletter, get rid of your worthless toilet paper dollars, send it to them, and you won't have learned anything. All right. Yep. All the people that prop the dollar up. Okay, but if that's what happens, that doesn't make the dollar worthless. As long as everyone's but the BRICS have had it. The BRICS are it. What a bunch of nonsense that is, too. There's nothing they can do about it. They all use the dollar. The only countries that are trying to end dollar hegemony are the ones that have been booted out of the SWIFT system. And they're the ones that have the worst currencies that no one in international circles wants to take or hold. And they keep talking about de-dollarization, end of dollar hegemony, dumping treasuries. Yeah, you know what they're doing? A lot of them are dumping treasuries in order to raise the dollars that they need to pay their dollar-denominated debt. But people don't think that far into it. They just want to say, end of dollar hegemony, dollar collapse, worthless dollar. Even the dollar collapse story has been going on for 40 years. Remember those guys moving the gold? First it was the gold back yuan. Then it was, I'm the one who pointed out, and so did Coach Jansen, that they can't exchange they made up this story. China never said this, but I heard many commentators say, China just announced, no they didn't, that they were going to allow oil producers to engage in a yuan-denominated oils futures contract, but then they wouldn't want the yuan, which is interesting because they were always saying that the yuan was going to be the world's reserve currency and everybody would want the yuan. Well, you just said no one would want the yuan because they're going to want gold instead. Well, there goes your argument that the yuan is a good currency. They were right in saying no one would want the yuan. They said, so what China would say, no problem, just go over to the Shanghai Gold Exchange and we'll give you gold. Yeah, one problem with that, they never said they would do that. Second problem with that, it'd be moronic. They'd be out of gold in about a week. And third is, they don't allow gold to leave the country that way. The whole story was nonsense. Once that was pointed out, they act like, oh, well, that's not what we meant. What we meant was that the oil producers will now have yuan, and now they're going to take that yuan, they're going to go buy gold, and they're going to drain the LBMA. They're going to go and buy gold. This is going to create massive gold demands, like this gold triangle story. And that's going to boost the yuan, and it's going to create massive gold demand, and gold set to skyrocket along with the yuan. Well, none of that happened, because first of all, as I pointed out at the time, if you are a oil producer and you don't want worthless dollars, you can easily go and buy gold with that. You don't have to enter into a yuan-denominated oil futures contract, get yuan, and then say, I don't want worthless yuan, I'm going to go buy gold. Never happened, was never going to happen. That wasn't even their original story. The original story was it was gold backed yuan. Then it was going to create demand for gold. And then none of it happened. Then you don't hear that story anymore. Then it's COMEX default. There's no... Never ends, never ends, never ends. All right. Let's see. Nicole Color, not pumping, just saying what I feel. Yeah, and a lot of what people feel is based on what they've heard from somebody who puts a lot of emotion into what they're saying. So you figure, well, they say this stuff a lot, and everybody else repeats it, and everybody else gets really angry about the dollar and about what they do and the banksters and all this. You start to believe stuff that you hear. I remember AC Chain. They're going to enslave humanity with an SDR that the IMF... That story was another story that was 100% incomplete, incorrect. The IMF is the only entity that issues SDRs. A private ICO in China cannot issue and be authorized by the IMF to issue SDRs. And the United States has veto power over even issuing SDRs by the IMF. They're certainly not going to agree, or all the 186 countries are going to agree to allow the SDR to be issued, authorized by the IMF and all the countries in it, over the veto power of the United States, which means the United States would have to agree to it, and say, yeah, let's put the world's assets into a Chinese ICO, make that the world's reserve currency, the SDR, and not allow Americans to own it. There's nothing in any of that scenario that makes any sense, or even is possible if you wanted it to make sense. But that's the kind of stuff you hear, and you see 500,000 views on one channel, 600,000 views on another. Like 2 years ago, this was the big story. AC Chain, look at this. Or the other one is world currency. The Rothschild said it. It was on the cover of The Economist. Nonsense. All nonsense. Taylor Cullen, you are the one who followed it every time they backtrack. Actually, one of the big reasons I started tuning in regularly. Thankful I discovered this awesome channel. Well, thank you. Now, what you won't get from me, and I don't make that type of speculation. And if I do, I label it as speculation. I say, so for example, one of the things I speculate about, I don't insist on, is I say that Wall Street wants a crypto bubble. And the reason I say that is they didn't participate in the last bubble of the cryptocurrencies. They didn't get the ICO fees. And I see the moves that they're making. Fidelity setting up a crypto trading platform. TD Ameritrade doing that. I see Bakkt, which is a consortium of New York Stock Exchange and Microsoft. I see 8 companies, Van Eck, ProShares, trying to get Bitcoin ETFs. So logically, I tell myself, I think that's what's going on. You don't hear people say that. You hear Bitcoin fanatics say Bitcoin's going to crush the bankers. And then you hear other people saying they're going to arrest everybody and Bitcoin's going to go to zero. My speculation has nothing to do with either of those points of view. My speculation is that Wall Street wants a crypto bubble. And the reason they want it is not just because I see them doing it. It's because equity prices are too high. And I've seen over the last 35 years that Wall Street needs a bubble when one of them bursts. So from the last bubble that burst, when you had the internet bubble burst, you had the real estate bubble. Now you have the everything bubble. Well, now I think you're on way for a crypto bubble. Any event, that's it for tonight. We will see you tomorrow. Game changers and all. Thanks everyone for listening. please go over to Smaulgld and subscribe there. And check out the interview with James Henry Anderson over at Silver Doctors tonight. And we'll see you tomorrow. Thank you very much.